Hey everyone, welcome back to Nadlan Forum Podcast Daily. Lior here. So, is rental property still a smart play in 2025? That's what we're digging into today. If you followed us for a while, you know I love getting into the nitty-gritty of real estate trends. I mean, we've talked about everything from down payment hurdles to cash out refinancing. But rental properties, that's always the big debate, right? Let's start with the basics. What even is a rental property? And why do so many investors, myself included, keep coming back to it? Basically, we're talking any property you buy with the goal of earning some income by renting it out. Folks are drawn to this for a few reasons. Steady cash flow. That's your monthly rent coming in like clockwork. Well, hopefully. You've got appreciation. Property values tend to rise over time, at least in the right markets. And then equity growth, which means with every mortgage payment, you're slowly owning more of the property. And let's not forget, the US rental demand is still pretty strong, especially in urban spots where you've got job growth, big universities, and here's the kicker, not enough housing being built. Places like Florida, Texas, and Georgia, for example, show up time and again on platforms like Zillow as having rising rents. It's not just talk, the data backs it up. But it's not just about the headlines or the numbers. Let me give you a flashback. When I moved from Israel to New York back in 2010, my first investment property was actually in New Jersey. What drew me to that market back then wasn't just the price. It was seeing all these companies hiring, warehouses popping up, and literally zero new rental units on the market. There was this palpable job growth and an obvious supply crunch. Classic recipe, honestly, for a good rental investment. And yeah, I'll admit, I was nervous making that first move. But understanding those local demand drivers, honestly, that gave me the confidence to jump in. It wasn't a magic formula, but it's the kind of groundwork that really matters. All right, let's not get caught up in nostalgia. Let's shift gears a bit and talk about the math behind those investments. So let's break down ROI, the return on investment. At the end of the day, you gotta know if the numbers work, right? Whether you're new to rentals or you've got a few in your portfolio, ROI is what makes or breaks your investment. Here's a basic example, just to keep it simple. Say you buy a property for $200,000, and after all your expenses, think maintenance, taxes, insurance, management, you're clearing $16,000 per year. That's an 8% ROI. And in 2025, from what I'm seeing and from what folks share in the Nadlan USA forum, anything between 6% and 10% annually is actually a solid target for most investors. Now, what determines whether you'll get that good ROI is not just the purchase price. It's also things like vacancy rates. High vacancies, they just eat into your profits. So do unexpected maintenance costs. That's why a lot of investors, myself included, get really into the weeds on neighborhoods, schools, public transport, all of that. There was a thread last week on the Nadlan USA forum about the best high-yield zones in Atlanta, for example. People shared their actual numbers, but also the headaches, troubles with tenants, or how a property looked great on paper until half the units sat empty for months. So, it's never just a spreadsheet exercise. You have to balance potential with real-world obstacles. And honestly, sometimes the best lessons aren't from slick ROI calculators. It's from those war stories folks share in the forums. Like, I learned about a great deal in Texas from a member who got a fantastic ROI on paper, but then faced major plumbing issues that set him back a year. Gotta factor that in, right? Now, with your numbers in mind, how do you actually pick the right property for this market? Let's walk through that decision-making process. All right, so you've wrapped your head around ROI, but how do you actually make the right move in 2025? First off, research your area like a detective. Population trends, job ads, is rental demand climbing or falling? Use all the tools at your disposal, like ROI calculators, even cap rate calculations, just to get a sense of what's realistic. And whatever you do, don't skip the property inspection. Trust me, I learned this the hard way. I once bought an apartment in Brooklyn. Looked great on the listing, solid location, numbers checked out. But, and this is embarrassing, I was in a rush, didn't get a thorough inspection, and then right after closing, boom, water damage in the walls. The repair bill wiped out pretty much all my first year's income. Painful lesson, seriously. But here's the thing. Networking with other investors helped me bounce back. There's a reason we keep talking about the value of communities like the Nadlan USA Forum. Sharing those hard-earned stories, whether it's unexpected vacancies or which financing options made the most sense, that's how you sharpen your due diligence for next time. Now, the real perks of rentals, they're pretty clear. Stable monthly cash, potential appreciation, some nice tax benefits through mortgage interest and depreciation, and, of course, leverage. Financing lets you control big assets without needing all the cash up front. But it's not all upside. You can get thrown off course by vacancies, repair surprises, or just general market volatility. Stuff we've covered in earlier episodes, like when we discussed the luxury market cooling off or opportunity zones being a double-edged sword. The key is being realistic about both the risks and rewards. If you stay patient, do the homework, and lean on your investor network, owning rentals can still be a solid wealth builder in 2025. And hey, if you made it this far, you know there's a lot more to unpack. We'll keep digging into these strategies and market shifts in upcoming episodes. Thanks for listening, and as always, hop on to the Nadlan USA forum if you've got questions or need a sanity check on your next move. Catch you next time.